Today, we are going to talk about how to buy a home when you own another home. Good morning. This is David Xie with the Xie Mortgage Team. So this is really important, and the reason I decided that we wanted to talk about this is when people are buying a home and they own multiple properties or own another home, it's really hard for them to understand and know what you have to bring to the table and what the expectations are. I feel like there's a couple different factors that we have to address on how to buy it and what documentation to gather so it'll make your process as smooth and seamless as possible. Number one we're going to talk about is assets. What assets are needed? Depending on the type of loan that you currently have, this is really opening up Pandora's box, right? If you have another FHA loan right now and you want to buy another FHA loan, well, there may be distance requirements. There may be letters of explanation that you have to write to prove and answer why you need to do that. If you have an FHA loan and you're going into a conventional loan, there's a different set of factors that are needed. However, equity is not one of those things that you have to have. With an FHA loan, you've got to have 25% equity in your previous home in order to use the rental income off of the departing property, which is the property that you currently own, to offset that mortgage payment to be applied to the new loan that you're getting. Whereas a conventional loan, you will be able to use that rental income regardless of the equity levels to be able to use that rental income to offset the current mortgage payment to qualify for the second home. What if we're buying a second home? If we're buying a second home, then there is no rental income offset. So you're going to get a standard conventional loan and there's no rental income that can be used to offset the current home that you're living in. And then if you're buying an investment property, once again, the same thing. However, if you have other properties that are investment properties, this is how we're going to use that income to qualify. If you have other investment properties, number one, we're going to look at your tax returns. We're going to want to see if there's any rental income gain or loss that is filed on your tax returns for the last year or 2 years to be used as an offset. Number two, if it's a recently acquired property, then we're going to need leases, we're going to need rental payment history, and we're going to need proof of the security deposit and or first month's rent depending on your circumstance. That kind of covers the assets part and it covers what's needed. Secondly, whenever you're going in and buying these homes, we're going to have to verify your liabilities. So what are your liabilities? Your monthly mortgage payment, whether that mortgage payment includes your taxes, whether it includes the insurance and any association fees. Association fees are always one of those things that consumers forget about and it doesn't show up on your credit report. However, anytime you're trying to hide something, it shows up on a title search. So when we go through and we do a title search and we're looking things up, we're going to see, hey, that property that you currently own has an association fee or has multiple association fees. Underwriters are like Inspector Gadget. They're going through and they're looking everything up and they're looking for that part that doesn't fit. Definitely all the liabilities that are associated with the home, your mortgage, any second mortgages, any of those fees have to be taken into consideration. Number three is the loan type. You obviously as a primary residence can use any of the different loan types such as USDA, VA, FHA, conventional, any of those loan types to be used to purchase your primary residence. On a second home, it is different. You will have to get a conventional loan for a second home or non-conforming loan. And then for investment property, same thing, either a conventional loan or non-conforming loan to qualify. When qualifying for multiple homes, it's really important to also have your exit strategy in place. And the exit strategy is important because number one, you have to offset that monthly mortgage payment. Having that monthly mortgage payment with rental offset, so having your tenant in place if you're going to use it as a departing residence. If you're buying a new home, having those tenants in place that you're going to use as an investment property, or if you're using as a second home, to put all the safety precautions in place since you're not going to be occupying it and there's going to be no usage unless you're actually going down there, and depending on the terms and times, you may want to make sure that you have someone bird dogging it for you to make sure that, there's not like any issues that go on with the property. People aren't breaking in, people aren't going in the backyard and using the swimming pool when you're not there, and making sure like water and electricity and things like that are all secure and safely fastened. So if you were to have, let's say, a catastrophic storm come by and electrical goes out or whatever, you have safety precautions in place. And I sometimes even go as extreme as turning off the water when I'm not in one of my properties. So if a pipe does burst due to cold weather or anything like that, or even with some of the polybutylene, I think that's what it's called, pipes, I have safety precautions in place as well as auto shut-off valves. Other factors to consider when buying an additional home is making sure you budget properly and have the cash reserves for it. Especially with a conventional loan, if you have multiple properties and you're buying another property, not only will you have to have the down payment needed and the closing costs potentially, you'll have to have certain cash reserves for each one of the houses that you have with mortgage payments and or taxes and insurance. There's a lot of different factors that kind of go into owning a home and buying another home. And there are also a lot of different ways that you can fund it with funds such as your checking, savings, investment accounts, and even 1031 exchanges. So if you have any questions or concerns on how to buy another home while you currently own a home, whether it be your primary, second, or investment property, feel free to give me a call, because I'm the guy that loves putting my hands into different situations and crazy situations and figuring it out. My name is David Xie, and I can be reached at 757-478-8493, and I will talk to you guys later. Bye.